even though you are not invested in Terra, and even though you are not invested in any other projects that are directly affected by a stablecoin like this, you should still know and educate yourself about it. And that's the reason why we're looking at this, because you need to know what can make a whole market at least shake in the fundament or even collapse into a bear market. Hey everyone, it's the patient hodler coming at you with another video, and in this one we are going to try to understand what happened to the crypto market yesterday and today, and what especially happened to Terra, Luna, and as always we are going to talk about Ecomi and Vivi a little bit in this video as well. But before we start, please keep in mind that I'm a crypto and NFT investor and not a financial advisor. So please do your own research before you ape into Luna, into Ecomi, or into any other investment opportunity that we are going to talk about during this video. If you enjoy this type of content, please consider dropping a like, subscribe to my channel, and let me know what you think about the Terra UST disaster in the comments below. If you want to do more than subscribing, liking, and commenting, then please consider becoming a rare hodler, a Patreon, or channel member to my channel. The link for this you will find in the description. And at this point, I want to thank my Patreons and channel members for supporting me all the time and making this channel, this journey possible. Now, with that out of the way, let's get started. So, as we can see here, we have experienced a pretty nasty dip in Bitcoin in the last days. So what we are looking at is the daily chart of Bitcoin, and we fell with this dip into a temporarily oversold territory on the daily chart, and we can see that the volume has increased. So far, this is only charts and indicators and metrics, but this dip has already started, and then this Terra Luna disaster came in, and we are going to read together the whole explanation on what is happening or what happened, how this could be even a bullish thing for Luna, even though it doesn't seem like this. And now, before you are turning off the video and saying you are a lunatic, this is not possible that this is a bullish thing. Bear with me, because I think there are some points at least to consider, and I'm also not too deep invested into Luna. I'm just curious what happened, because I think stable coins are a big factor of our world from now on, of the crypto world, and also something that the governments of this world have still to regulate. So it is very interesting to see what's happening about this, and in the end we are going to listen to someone who could explain how this can rip the other projects and the other coins down with this one. So let's look at it together here. So as you can see, I'm going to pull this directly from Twitter, and here we go. This is a thread, and we are going to read this one together. So this is from the channel Terra Daily, and actually I wasn't following them, so I'm going to do this now. And make sure if you are reading this thread that you follow them as well, because I'm going to use their content here, and I think it's very valuable. So it starts here by saying UST is fully algorithmic in the mechanism with Luna. Market participants can mint UST by burning an equal amount of Luna in dollars. So that was the first super attractive thing to me, because it basically showed, okay, always when there is UST minted, that also meant Terra burned, but the reverse effect is not there. So there would not be Terra coming back. Vice versa, one UST coin can be burned for the dollar value in Luna. So Luna would decrease, the value would increase, and once UST is being burned, then you could only get dollar value out, but not Luna. So it would be essentially deflationary. So the rate would be always 1 UST is always $1 of Luna. So the amount that would be burned when minting would also be shrinking with a shrinking Luna supply, when actually the value of Luna would be higher. So as we can see here in this image, and I will return to the thread in a second, we can see here whenever we have UST, we can see whenever we have the UST minted, we have a burn of Luna, and whenever we have the equivalent of $1 minted, we have the burn of the UST. So I think this makes sense. I hope I said this right, but we have said it before already. So we have basically a transaction cost here, or swap fees that are being managed by this seigniorage machine. So this is basically the creation mechanism. That's why it's written here of each and every UST. And so far, so good. This makes total sense, and in theory, it should work. So let's continue and see what else happens. So we can read further. The higher demand for UST, the more Luna decreases in supply. Moreover, using dApps built on Luna ecosystem will require the users to pay the gas fee in Luna token. Supply decreases plus demand to pay gas fee increases is equal an increase in the price of Luna. So apparently all the decentralized apps that are built on the Luna ecosystem had to pay gas fees to act on the Luna token in Luna token, and this would give value to the token. So far so good, we understood that one. To protect the wall defense of UST pegging to $1, BTC is purchased and stored in the fund of the Luna Foundation Guard. So this was when they announced that the UST, this algorithmic stablecoin, would be backed by BTC. So basically they tried to store, like other governments tried in the past to store gold to back the currency, to buy Bitcoin and back the UST to maintain it at $1, because obviously the purpose of a stablecoin relating to $1 UST is to be always at or slightly around $1. We have seen that with other stablecoins, that they are like 0.99 or something like that. But the objective is that it cannot deviate. So exactly what they tried, that it doesn't happen, but right now happened. So this is important information to understand why it happened, in my opinion. So then we can read further. When the UST peg drops below 0.98, the Luna Foundation Guard that we have read right now, which is basically a fund full of BTC, would probably automatically start to sell BTC for the sake of buying back UST in order to bring the peg back to $1. So basically, if there is an overload of UST stablecoin coming into the pool of stablecoin, but not enough demand, so what also gives value to a currency, then you see this price dropping. This guard fund that we have seen here in the third step would automatically act, sell BTC and buy the UST back. It can be seen that all three wallets had sold and transferred all BTC to save the UST peg. Check the wallets below. So what we see here now is that you have these three wallets that are part of the Luna Foundation Guard, and we can see here now that we have influx of BTC that actually pumped the price, because there's a lot of influx where they purchase and purchase and purchase BTC, and probably these BTC purchases were off app, so off over the counter, and basically made without seeing them, or most of them, in the order books. I think one of the first BTC purchases that ever happened were on an exchange and pumped the price of BTC. And to avoid being accused of market manipulation and artificially pumping BTC, probably they went to the OTC trades. But we can see here, we have, beginning from here, 6th to 15th, we have a lot of BTC purchases, large ones here, and even larger ones during a whole April. So we have here, I think this is around 80,000 BTC that were in those wallets. And these BTC were apparently sold off now to buy back the UST stablecoin. And we can see here, so the LFG, the Guard fund, has acquired an additional 37,000 Bitcoins additional. So there was one bigger purchase before, and this is $1.5 billion. So now, one important thing, the only way to mint more UST is still only by burning Luna. You will not be able to mint UST via BTC, since this is only a new mechanism to defend the peg. So exactly what we have seen in the beginning, we cannot get Luna back because it's always burned. But here we can see the fund, the defend mechanism, which basically says from the BTC wallets, the BTC will be given out, and UST instead, that has been minted and is not required on the market, would be bought in, which would then maintain all this UST that is being minted in this exchange process to the level of $1. So basically what we have read is reflected here, and the defender mechanism starts at 0.98. So now obviously the question is, why has it dropped so deep if this mechanism would be able to, or this mechanism would go along with this wallet and there's so much BTC in it? So we read further. In this maybe downtrend market, investors tend to store their assets into stablecoin as many as possible. Thanks to this beneficial APY from Anchor protocol, the money flow has been attracted into the TVL of Anchor and reached an all-time high of 20 billion as well. So from my understanding, this basically means that if you would take your UST and you would lock it on Anchor, you would have a very high return on this basically investment. Also would lock up a lot of this UST. So the TVL of Anchor reached an all-time high of $20 billion. So as we can see here is, congratulations, total value locked up, TVL on Anchor protocol reaches 20 billion. Through the recent adjusted APY, it can be seen that investors still trust to experience using Anchor. Not only staked mainly in Luna ecosystem, but UST has also been bridged to various blockchain networks to increase its use cases, especially yield earning, staking, farming. So as we can see in this tweet, it's not long ago, May the 4th, breaking news, the 4-pool stablecoin includes UST, USDT and so on, is now live on Curve Finance. So this is important because this Curve Finance app, so apparently this blockchain network Curve Finance that we also can find as their own coin and to invest in, they have also used UST as in a pool to be able to trade UST on Curve Finance, or use UST on Curve Finance. Now, UST has been minted effectively and mainly in the amount and value. Lunatics also witnessed and felt the moment UST officially flipped BUSD, I think that's the Binance stablecoin, and jumped into the top 3 stablecoins by market cap. As we can see here, UST Terra money officially flipped BUSD and jumped into the top 3 stable coins. We can see it here that this actually happens, which is, yes, the Binance USD one and the DAI one. Okay. However, from the 1st May 2022, Anchor announced its updated APY from 19.5% to 18%. And this might have made many earners, savers feel downgraded during the maybe downtrend market. So usually what is already happening in the downtrend market is that people get out of the projects and get into stable coins, and then maybe in this case even bring these stable coins over and lock them up. So the downtrend, as we have seen in the beginning of the video, has not begun yesterday, but is already going on since a couple of weeks. So people might have pulled out a lot of value out of BTC, Ethereum and the other projects and brought it into then UST, large amounts of UST, to then stake it on Anchor. But now that they lowered the benefit, the yield, to 18%, people might have ripped this out of the staking and maybe to even sell it off, because with another stablecoin or another project they would get more APY on Anchor or on any other project or staking method. So we see here from May the 1st, it was still starting from 4 p.m. UTC, May 2022. The earn rate of Anchor protocol will update to exactly 18% APY. Maybe there are some powerful forces that do not like the success of Luna UST BTC mechanism. And I bet this is the right assumption, that there are big players out there, or even governments or institutions, that do not like what they see, how this mechanism of Luna UST BTC works. Somebody sold, and this is critical now, this is key, because one thing is a super normal market mechanism destroying the stablecoin or bringing it out of balance, and the other one is a maybe coordinated attack. And as we can see here is somebody sold $285 million UST on Curve Finance on the 8th of May 2022, which led to the depeg of the UST. So the depeg again is when it deviates more than to 0.98 and probably directly collapsed to 0.9 or something like that, which then activated the sell-off of Bitcoins. So someone sold this huge amount, like 30%. This is like 30% of a billion. This may have started the war of panic selling UST to make it depeg. And that's exactly the point, because if you sell it in small chunks, this 285 million, and it would go slowly to the 0.98 value, then there would be a little bit of BTC sell-off and then buying of UST to stabilize it. But with a huge amount in couple of seconds or minutes or whatever, like in a super short time frame, maybe people saw it before it was adjusted by the selling of BTC, so the mechanism might be too slow to be able to do that, and therefore people saw this and tried to get out, which causes a cascade of selling and bringing it more down, which creates more panic and led to a almost 30% dump of the stablecoin. So actually, as someone wrote before, this stablecoin outperformed other coins in the dip, which shouldn't happen at all and obviously would make people panic a lot. So as they say, this may have started the war of panic selling UST to make it depeg. News of curve wars. Yesterday someone started selling UST en masse, so it started to depeg. However, that was met with a great resistance to the peg was restored. To get enough USD for that, a lot of ETH and ST ETH I don't know what that is actually, but maybe some of you can just educate me here, were sold also. Maybe a stable ETH or something like that could be possible. Aftermath, high curve trading volume. Okay, so they on Curve Finance this apparently happened, and I think it happened on another platform as well. So then we see today marked a memorable event for the whole Luna ecosystem. And here we have 3 points that happened. It can be seen that investors were in a panic sell to withdraw their UST assets staked in Anchor TVL 50% down. And actually we have seen that 50% down. Terra was one of the projects with the highest TVL. TVL stands for total value locked in. So a lot of staked Terra, a lot of staked UST in various protocols and dApps and so on. LFG, which is the guard mechanism, sold BTC to save UST to peg $1. BTC decreases leads to the whole market diving into red blood. So now we see the other side, why the market is as we have seen it before, why we had such a massive dump in BTC, because we had seen the cascade of panic selling UST, which then would be matched by a lot of BTC being automatically sold by the guard mechanism, which caused the market to dump and instigate more fear and overall ripping the market into red blood, as they write here. And that's exactly what we have experienced. But this is super interesting because this means that basically this mechanism of selling BTC is only good or only works beautifully if you have slow sell-offs, but not from the giant whales out there in the market. So we see how this mechanism that should protect the UST actually caused a problem for the UST. But I think there are mechanisms to maybe back it by also something else, not only BTC, but you could basically back it by, I don't know, something that isn't within the crypto ecosystem and then doesn't get ripped down so fast if you would sell it, or maybe diversify in that guard pool. So these are just some ideas that I get here. Maybe there's something like gold, silver, platinum or something that you could use to sell off, which has a way larger market cap and wouldn't dip so hard and also wouldn't back influence the crypto market. So then we read here, a blessing in disguise. That's very interesting. Many people were able to make a profit by arbitrage trading and catching the dip of UST 0.6. Yes, true, but there are also other people that got scared and sold at a minus to make this happen. And obviously the super whales that either sold because they wanted to get into something else and didn't mean to do that, or even the attackers that were selling into this to have it dip so hard. Many people were able to buy Luna at $26 and sell it at $38. Yeah, so many people bought the dip here, including, so I didn't sell, but I bought low, so like around $30, only a couple. And if that is stupid or not, we will see in the long run. But I thought they will be able to solve this in the end. Many people were able to do derivatives short in futures, etc. So yeah, some people benefited from this, but I wouldn't say that this is the victory here. Currently, we can see that UST is trading at around $0.9. If it can get back to $1, isn't its trust much higher than ever before? Yes, and I think they have a fair point with this one here. The other one I don't see as a benefit, but this one I see. If it gets back into stability and then the mechanisms are being readjusted and they learn from it, they would be the first or one of the first stable coins under attack or in big trouble to recover. And yes, this would make me at least more bullish on the project. This would prove that even this wouldn't shake their foundation. If you believe in decentralized finance, would you rather go with a destable coin that has proven itself? Yes, I think so. I think actually, and this is nothing to shill my bags or so, because I have so few Terra that it wouldn't make any sense. So this is only reading through it together for educational purposes. So then we see Lunar UST mechanism is also the example for TRX and NEAR with their USDD and USN, the stable coins for this. For these projects on NEAR protocol, and I think TRX is Tron. What will other ecosystems prepare for its mechanism? Actually, we have seen that the old way of stablecoin, like the VUSD, for example, didn't suffer any problems like this. So maybe it was a smart move to go with these stablecoins, at least for the beginning, because some people were actually fudding a VeChain because they had chosen a more old school approach to their stablecoin. But I think from this perspective and from what happened today, I think that was a smart move to go with the old ways. What we can see here, this thread is quite long. Everything in this cryptocurrency is possible to happen. Terra Daily believes the peg will be restored. It's just a matter of time. Trust will be restored as investors see the builders making the necessary changes during this crisis. And I think that final statement wraps it up quite good. We have to understand that what things like there could be a stablecoin getting completely destroyed and not return. And this could rip a market through all resistances into a bear market. So even though you are not invested in Terra, and even though you are not invested in any other projects that are directly affected by a stablecoin like this, you should still know and educate yourself about it. And that's the reason why we're looking at this, because you need to know what can make a whole market at least shake in the fundament or even collapse into a bear market before or when it already would, but even harder right now. So this definitely what happened today had the potential to create such a collapse. Now, here we say, okay, this thread is quite long. Everything in this cryptocurrency is possible. And yes, that's true. I wouldn't write it like that way after a collapse like this, because everything in cryptocurrency is possible is also something to distrust many projects with what they are doing. But in the end, they are saying that trust will be restored. And when you look at other projects, I mean, Solana had several network outages already, and still investors are coming back and trust that they are going to fix these things. This is, let's say, part and parcel of a very early project, that things are happening, things are not going quite at this, or that some tokenomics have to be switched and changed up. Also, with regards to regulations, if you are investing in Ecomi, for example, we know that they had to get rid of the initial idea of buybacks into burn wallets because of upcoming SEC regulations, or at least uncertainty, to prevent that the whole project is going into the mode of security and therefore never be listed on any bigger exchanges. And therefore, it's not in the interest of the investor. So we will see a lot of projects still working their tokenomics, their stable coins, their things that they are doing. So in the end, it's better to get out with a shock and go back and learn and restore trust and see in the coming years that it will not or didn't happen again, or maybe it happens again but not to that scale, so they can readjust once more. But this would still make me trust this project. So in the end, I think super cool project, super cool thread that they put out here, good explanation, and yeah, already before you leave this video, and I'm not at the end because we are still going to watch that little video, but I want to say already, if you enjoy to go over a whole thing like this and just educate ourselves together and just look at this, let me know in the comments below if you would want something like this again, or if you say no, fucking boring, don't do it again, that's also fine. Please let me know. Every feedback is very welcome. Now let's look finally again, let's look at this thread first, because here this channel basically shows all the liquidations that happened with leverage trading and so on, and here we can see that there was also leverage liquidation in the play. And this must be one of the biggest ever on this channel. So this is 225 million. So this also was an influencing factor. That a lot of people probably by this downfall of Terra, of the stablecoin, got liquidated. And this might have increased the cascading effect and might have caused it to be more difficult to get the peg back in line. But finally, let's listen together to this video here, and thanks for this NGA Chofet, or however you say this, for posting this. This was very interesting. And yeah, so he says Luna and Terra stablecoin situation explained, but actually it's not really explaining the situation, but more what could happen in such a case. Let's listen.
Quite a complex situation. I definitely think that there is the potential for contagion if the Luna situation continues to get worse. Primarily just because there's so much cross-collateralization of assets amongst the crypto ecosystem. So, people go long and leverage their long Luna positions with other tokens, such as Bitcoin and even some altcoins. And when you see such a massive sell-off occur in one of the...
So just pausing this here real quick, because he just said that people were leveraging Luna not only with Luna tokens, but also with altcoins or even Bitcoins. So that means if they got liquidated, that also caused a massive sell-off in those coins that were used to leverage.
And when you see such a massive sell-off occur in one of the group's largest assets, such as Luna, which was, very much kind of a top 10 coin for the last 6 months, it just has a cascading effect across the entire ecosystem. Even if there isn't kind of business or counterparty contagion risk, there's this very consistent dynamic where kind of everything gets taken down, because as people are losing money on their Luna positions and getting liquidated, they may try to avoid those liquidations at steep discounts by, selling another position and collateralizing with that, or maybe they got automatically sold out of another position that was collateralizing a leveraged long Luna position. So I think the counterparty risk elements in that kind of contagion is yet to be seen, but absolutely it makes sense that, having such a large unwind of one of the largest tokens in the space would impact the rest of the space, even if the rest of the space from a business perspective manages to stay isolated from the Luna.
And now this is interesting, because if in this chart we can see very good these spikes up. So this must be the huge purchases when they tried to get the peg back to the $1 line. So you see all of these, like, it starts already here with a lot of sales, and then it just gets dumped into oblivion, and when we see a spike up all the way again to $1 and then back down again. So there are several tries to get this peg up again, and these must be the huge BTC sales and then purchases of UST that we have seen before. So this, in my opinion, is a great assessment, because we cannot only look at an isolated project, we have to look at how it affects the market. And the interesting factor, in my opinion, here is usually we say Bitcoin leads the way and all the other projects are just following behind. And that is true in 99% of the cases, I would say, because Bitcoin does something and everyone else falls down or pumps up. But in these special cases where something is changing the whole dynamics of the market, actually Bitcoin can get ripped down by a failure in one single project, especially when it's in the top 10 of the coins and also in the top 10 of the most TVL projects. And here is to say there is one other project and one other case that has a same impact or same potential impact on the market, and that would be XRP. Not because I like XRP as an investment, I'm not invested in XRP, but I'm sure as hell cheering for XRP because in the SEC case, it is necessary for XRP to win that case so that all the other altcoins are safe for institutional investments and are not being rated or regulated in a different way. So in that sense, the XRP decision, the decision over what XRP can do or can't do, and the judgment of the SEC that is being dragged out for a long time, this is also of this magnitude, in my opinion, if not even way more. And with that, I'm already at the end of this video. Please let me know in the comments below what you think about all of this, and don't forget to leave a like, subscribe to the channel, and tap the bell to always get notified whenever I upload a video or start a live stream. Now, wherever you are on the world, have yourselves a great morning, evening, day, night, or afternoon, and see you in the next video.